Good morning. Good afternoon. I was gonna say good morning. How are y'all doing this morning? Afternoon. I'm just still determined this morning. Ready for some cash flowing?
Sure.
Kick.
I struggled with this chapter a bit, so
Yeah, the statement.
I just doing the smart book. I
Yeah.
just could not keep track of what was what for the life of me. I thought I'd finally got it down, and I clicked the right answer, and then it was like, nope, wrong.
Like the increase or decrease in accounts
Yeah, the
receivable.
inflows and outflows, like what category goes into what.
Oh yeah. Well,
That kicked my butt, but
we're going to work on it.
yeah. I have a quick question about the FSA project.
Yes, ma'am.
I've gotten pretty far into it, but I just wanted to make sure before I submitted it. So for the income statement part of it, we do the horizontal and vertical for 3 years, right? All 3 years?
Mm-hmm.
Okay. I just want to make sure on the income statement part because there were only 2 years on the practice problem we did.
Oh, right, but
Okay.
that was just because that was all the information they had given
I
me.
just wanted to make sure.
Yeah, no. And look, it takes what, 2 seconds to do it?
Yeah, it didn't take me long at all.
Yeah, once you get that formula down and copy paste it.
Yeah. Yeah. There you go.
Did y'all have fun with this chapter?
No.
No. How'd y'all do with this chapter? Yeah, I'm trying to decide on the plan of attack here. I think I'm just okay, so that's what we'll do. Oh, good afternoon. It's 2:00. You ready to do some serious cash flow in here?
Of course.
Of course. So, as I had mentioned on Thursday last week, that the statement of cash flows is a change statement where we're looking at how did we begin with X number of dollars in cash at the beginning of the year, and how did we end with X number of dollars of cash at the end of the year? And we need to figure out how do we understand how to capture all of the cash inflows and the cash outflows that a company has had efficiently, because we know that we can't analyze the cash account and then categorize everything, because that would just be too inefficient, such an inefficient way to prepare that statement of cash flows. So we talked about, and I gave you some definitions of how do we determine whether a cash inflow or outflow goes into which of the three sections is one of the things that we have to do. And then the other is, how do we efficiently capture the cash flow, cash inflows and cash outflows that happen during the year? Okay, my hair has gotten so long, it's just doing what it wants. So anyway, it's all right, I'm healthy. So the first thing I thought that we would do is, this is going to be a problem-driven day, because I assume that you have read the chapter and that you understand or the beginnings of understanding of, on the indirect statement, why, if accounts receivable increases, do we subtract it in the indirect method statement of cash flows? So I want to bring y'all through that logic, and then we will work a problem that I have uploaded in course content information that will be a practice problem where we could take a look at a classified balance sheet and an income statement and use the classifications that are in those two statements in order to prepare that statement of cash flows. So the first thing, though, I'd like to do is just to review, because we're only going to learn the indirect method. The indirect method. Now, the difference between the indirect method and the direct method is the operating section looks very different. And are you sitting in a tree, Luke?
No.
It looks like you could possibly be sitting in a tree. It'd be so cool.
That would be
Like,
cool.
It'll be so, Huckleberry Finish, But anyway, we'll take a look at how do we know what classification it goes into, whether it's operating, investing, or financing. But we'll also look to see how we can use the natural classification that we see already happening in the financial statements, because it goes from the general ledger to the financial statements, to use that classification to help us discern, number one, what the cash inflow and outflow is and which section it belongs into. So the first thing is, let's take a look at exercise 11.3. And exercise 11.3 is on page 578. And exercise 11.3 on page 578 has given us some descriptions of things that would appear on a statement of cash flows, and wants you to divide it among the three sections. So take a few minutes, based on your knowledge of reading the chapter, And the definition that I gave you on Thursday, and see how you would classify those, and then we will go through them together. Okay, so I first want you doing those on your own.
What page was it?
578, exercise 11.3.
Thank you.
You're welcome. Oh, and one of the things that I wanted to say is I will be sending out the link like the day before y'all's final exam. I think it's on a Thursday. I will be sending out the link of when office hours will be on that Wednesday, the day before your exam. I'll have office hours that are just for your class, open office hours that are just for the 202 class on Wednesday. I have an intermediate that has a exam on Thursday too, but theirs will be at a different time than yours. The other thing is, don't forget to send me when you have done the survey, the faculty survey of me, don't forget to send me the participation that you completed it, because that is part of your participation, that extra credit participation grade. So please forward me those surveys that you completed the evaluation on me for that. Okay. All right. Now you can think.
The exam is on the 4th, right?
No, it's either on the,
No.
no, it's got to be the 7th.
Oh, it's the 7th. Sorry, that was a different class, the 7th. Okay.
Yeah, y'all are at the 7th at 1:30.
Okay. I mixed it up with a different exam block then.
If so, you might be entitled to financial compensation. In 2020, COVID-19 pandemic. If so,
Okay. So let's go through each one of these and see which section of the cash flow statement. Right now, we're not going to focus on the numbers. Let's focus on where it goes and why does it go in that section. So the first one is purchase of a patent. And so I want to know, is it an inflow or an outflow? And in what section would it be reported in? So purchase of a patent. Come on, this ought to be quick. because we've
Cash
got,
outflow
okay, it's an outflow, good.
in investing.
And investing, that's good, Aiden. I know you said it like maybe. It's investing. Why should it soundedly be investing? Why should you have no doubt in your mind?
Investing is the buying and selling of long-term assets.
Okay, great, DJ. A patent is a long-term asset. And as DJ just said, cash inflows and cash outflows with long-term assets are investing activity. Okay. What about the next one? This one's interesting. Depreciation expense. Oh, and this is the indirect method. It's we're not going to learn the direct method. So depreciation expense. Am I going to add it or subtract it? And in which section?
You're going to add it to operating.
Good. You're going to add it to operating. Now, why? And that may be an unfair question, but I'll ask why. That's okay. It's a tough question.
Is it
All right.
because depreciation expense is a debit?
No, why we add something or credit or add it or subtract something isn't going to have anything to do with whether it's a debit or credit. Okay, so Aiden is correct in that you're going to add it in the operating section. All right. So what I'm going to do is right now we're going to pause right here because it is very important to understand why. In the indirect method, are you okay, Peter? Peter, you okay?
Yeah, I was just looking at my financial statement project. I did it backwards. I used 2019 as the base year.
Oh, gotcha. I could tell that you just did something that was
Yeah.
like, ah.
Yeah, no, I have to do it all over again.
Well, but it's Excel, so
Yeah, it shouldn't take too long.
shouldn't take too long. All right, let's find, let's look at indirect method. Look at 558 to 559, page 558 to 559. I know in the book, it begins at the bottom of page 558 and then goes to 559. It may be all on 559 in the e-text. And what it is, it's a completed indirect method cash flow statement. It's a completed indirect method cash flow statement. And we looked at this last Thursday, this indirect method cash flow statement. And what we see in the indirect method cash flow statement is that the beginning number, the operating section of the indirect method starts off with which number? Well, I know the 413,000 is what it is on that page, but what is that number?
Net income.
Good. DJ was the one that answered it on Thursday. It's net income. It's net income. So the indirect method, and y'all maybe want to write these notes down. The indirect method statement of cash flows, the operating section is what is different than the direct method. The investing section and the financing section look the same for both methods. So what's different between the two is the operating section. Under the indirect method, companies start off with what is reported as net income on their income statement. And what they need to do is they have to convert net income into net cash from operating activities. So net income has to be converted into net cash from operating activities. So there's two things that is telling us. One is that I've got to convert net income, which is a GAAP basis number. It has accruals and deferrals in it. A GAAP basis number into a cash basis number. Not only do I need to convert net income from a GAAP basis number into a cash basis number, but I also need to make it cash basis from operating activities. In other words, any investing and financing activities that are in net income must be removed. Okay? So again, in the indirect method, I've got to take net income, which is a GAAP basis number. I need to convert it into a cash basis number. And not only is it a cash basis number, but it is a cash basis number from operating activities. So I'm converting net income into cash from operating activities. So I've got to convert it from GAAP basis to cash basis, and then I need to remove the effects that any financing and investing activities had on net income. Okay. When you look at the one on page 258 and page 259, just focus on the operating section. And on the operating section, after net income, you see it says adjustments to reconcile net income to net cash from operating activities. What adjustments are needed in order to be able to convert net income into a cash basis number and cash basis from operating activities? And there are three types of adjustments that we need to do. There are three types of adjustments that we need to do. And I'm trying to see where they're listed. We need to, they're on page 547. Now on page 547, the first one says, do you see 1, 2, and 3? There are three types of adjustments. The first one says that we need to remove any non-cash items, Remember, we're trying to convert a GAAP basis number into a cash basis number. And the first one, non-cash items, it's saying, are there any activities on that income statement? Because remember, net income is your bottom number on your income statement. Are there any activities in the income statement that did not require the use of cash? Are there any items that did not require the use of cash? And the answer is yes. We know that depreciation expense. What is the journal entry when we record depreciation? What's the journal entry for me to record depreciation? 30 seconds or everybody fails the class. 29, 28, 27.
Debit to depreciation expense, credit to accumulated depreciation.
That's exactly what it is, Aiden. You saved their butts. Right? Debit depreciation expense and credit accumulated depreciation. Does depreciation expense require the use of cash?
No.
No. It requires the use of cash when we initially purchase the asset that we're depreciating. But depreciation expense that we have every year, debit depreciation expense, credit accumulated depreciation, doesn't affect cash at all. Now, what did depreciation expense do to net income? Did it increase it or decrease it? Did it make net income higher or lower?
Higher?
Well, for depreciation, what is it? Depreciation. What's the name of the account? Depreciation.
Contra asset?
Depreciation.
Expense.
Expense, right? What do expenses do to net income?
Decrease.
They decrease it, right? So depreciation expense decrease net income because expenses decrease net income. In other words, the more expenses I have, the lower net income is going to be. Now, because depreciation expense, like amortization expense, reduced net income but did not affect cash, we need to remove the effect of it. So the first adjustment that we have is to remove the effect of non-cash activities. Well, if depreciation expense made net income lower, how do I remove the effect of it? Am I going to add it or subtract it? So I've got net income sitting up here at the top. And the first adjustment type that I'm going to see is removing the effect of non-cash activities. Depreciation expense. Depreciation expense is an expense, and you just told me that it made net income lower because it is an expense. So if I want to remove the effect of it, in other words, what would net income be if I didn't have depreciation expense? Would it be higher or would it be lower?
Higher.
Higher. So you add it. So to remove the effect of it, you have to add it. In other words, if we did not have depreciation expense, net income would be higher. So we're going to add it back. We're going to add it back, okay? Because it's a non-cash activity. Then the second type of adjustment we have is non-operating items. Remember I said that we need to take net income and not only convert it into a cash basis number, but we need to remove the effects of investing and financing activities that affected net income. You can see that on the example that they have on page 547, common examples are gains and losses on sale of land, buildings, and equipment. Do you remember when we were accounting for the disposal of long-term assets? And we got cash from selling the asset. And then we had a gain or a loss from selling that asset. Well, number one, when we sell long-term assets, what kind of an activity is it? Operating, investing, or financing?
Investing.
Investing. So when we sell long-term assets, those are investing activities. So we want to remove the effects of investing and financing activities because I want to get to cash from operations. Well, if I had a gain from selling a piece of land, so say I had gain from selling land, did that gain make net income go up or go down? Was net income higher or lower because of having a gain?
Higher.
Higher. So if I want to remove the effects of it, what am I going to do to that gain?
Subtracted from net income.
Subtract it from net income. Remove the effect of it. Good, DJ. What if I had a loss from selling equipment? Selling equipment is what kind of an activity? Y'all gonna have a hard time with on the exam on this. What kind of activity? What
Investing.
it's investing. Good, because I sold equipment, which is a long-term asset, so it's investing. Now, if I had a gain, DJ just said a gain made it higher, so remove it. If I had a loss from selling from selling long-term assets, if I had a loss, what would I do? What did it do to net income? Did it make it higher or lower?
Made it lower, so you add it to net income to remove
Very
it.
good. Loss made it lower, so now I need to add it back in order to remove the effect of it. Okay. The third type is we need to deal with the effects of changes in current assets and current liabilities. This is your accruals and your deferrals. Net income, if I have accounts receivable is revenue this year, but am I going to collect the cash this year? Or am I going to collect the cash next year? Come on, accounts receivable. It's accounts receivables at December 31st. Why do I have accounts receivable? Because
You perform something on account.
okay, good. I performed something on account. So that means it's revenue this year, but when am I going to get the cash?
Next year.
Next year. Okay. So remember, I'm trying to convert net income, which is a GAAP basis number. In other words, ending accounts receivable is included in net income, but did it have any effect on cash? Did ending accounts receivable have anything
No.
to do with cash? No. No, because I'm going to collect it next year. But did my beginning accounts receivable, which was revenue last year and cash this year? Okay, so you see how you have to keep track of your accruals and deferrals and the impact that it had on net income and the impact that it had on cash. One of the good things about looking at your current assets and your current liabilities is I can look at the net change. And then after I say this, we're going to go back into exercise, whatever one we were just working. Think about this for a minute. Accounts receivable went up during the year. So accounts receivable went up during the year. In other words, the ending balance this year is higher than the ending balance than last year. So accounts receivable went up. Well, if accounts receivable went up, did I receive more money this year or less money this year?
Less money.
Good, less money. Because if accounts receivable went up, that means more people owe me money. And if more people owe me money, that means that it's then I got less cash. So if accounts receivable went up during the year, I need to subtract that difference between last year and this year. I need to subtract the increase. And the reason that I'm subtracting the increase is because that is less cash that I received. So I need to subtract it. Okay. What exercise were we working?
11.3.
11.3 on page 578. All right, so now let's get back to that list. Purchase of a patent is a long-term asset, and as DJ said, is an investing activity. And it would be or Aiden did, or that it's a cash outflow. that it's a cash outflow. Depreciation expense is one of those three adjustments, right? It's the one saying remove the non-cash effect. So what would we do with depreciation expense? Which section would it go in, and would I add it or subtract it? Aiden had already given us the answer to this one. What was it, Aiden?
You put in an operating and you subtract, or you add it.
Good. Operating, and you would add it to remove the effect of it. Okay? Because you need to add it because net income would be higher if you did not have that expense. A decrease in accounts receivable. A decrease in accounts receivable. First of all, which section?
Operating.
Operating. And if it's a decrease in accounts receivable, am I going to add it or subtract it?
Add it.
I'm going to add it. Cool. Sorry, I had to think for a minute. Normally just come rolling off my head. Right. So if I have a decrease in accounts receivable, I have to add it. Why? Why? Because if accounts receivable decreased, think about your cash. If accounts receivable decreased from the January 1st of this year to December 31st, right? If accounts receivable decreased, that means less people owe me money. So that means I collected more cash. That means I collected more cash. So I'm going to add it because I collected more cash this year because my receivable went down. If my receivable went down, it means less people owe me money, which means I collected more cash. Issuance of a note payable. Issuance of a note payable. Is it which section, inflow or outflow?
Outflow? Or
Okay, so if I issued a note to a bank,
it's an inflow.
it's an inflow. Good. It's an inflow because if I issued it to a bank, the bank gave me cash. It's an inflow. And in which section?
Financing?
Good. Financing, because financing is between creditors and the owners, between the company and its creditors and its owners. Okay. So issuance of a note payable, inflow, financing activity. What about increase in inventory? So think about the flow of cash. Increase in inventory. What section? Matt, what section? It's in District 5. Is somebody listening to a police scanner? Okay, so increase in inventory. What section?
That's a cash outflow in financing or investing.
Okay, is inventory a long-term asset?
Yes.
Come on, man.
No.
Come on, where do we report inventory on that balance sheet?
Is it
Operating.
operating?
Good, it's a current asset, so it's gonna be an operating. And if it's an operating, if I have an increase in cash, as Aiden said, it required the use of cash. So am I going to subtract it or add it?
Subtract.
Good, subtract. Because if I have an increase in inventory, it used up cash. So I'm going to subtract it in the operating section. Okay, in the operating section, because current assets and current liabilities are going to be, the delta current assets and current liabilities is in the operating section. What about collection of a notes receivable? Notes receivable is what kind of an asset? Current or long-term?
Long-term.
Long-term. Usually notes receivable are long-term, right? So if it's a long-term asset, what section is it in?
Investing.
Investing. And if it is collection of a notes receivable, is it an inflow or an outflow?
Inflow.
Inflow. So an inflow in the investing section. What about purchase of equipment?
It's going to be investing.
Investing and inflow or outflow?
Outflow.
Good, outflow. Exchange of long-term assets. So, God, I'm surprised they have that on here. Remember we learned, I didn't focus on it a lot, but we could exchange one asset for another. Just trust me on this. Exchange. This is long-term assets. And if I've just done an even exchange, it would be, you read in the textbook that at the bottom of the statement of cash flows, any financing or investing activities that did not require cash, we just list as non-cash activities on the bottom of the statement of cash flows. Look on page 570. Look on page 570, and do you see down at the bottom of e-phones, it says non-cash activity. It says we purchased land by issuing cash. And so that because it didn't require cash, because I gave purchased land by issuing common stock, by issuing common stock. So because I issued common stock and got land, there was no exchange of cash. So that would just be listed as a non-cash activity at the bottom of the statement. And that would be the same thing for an exchange of a long-term asset. Decrease in accounts payable. Decrease in accounts payable. What kind of an account is it? Accounts payable is what kind of an account?
A liability.
Good, a liability. Is it a current liability or a long-term liability?
Long-term.
Long-term.
Accounts payable, did y'all forget what y'all do this weekend? Come on, accounts payable, what section of the balance sheet is it in?
Operating.
It's a current liability. So if it's a current, accounts payable is a current liability. If it's a current liability, you're right, Sophie, it goes into account operating section. Okay, remember delta current assets and liabilities goes in the operating section of the indirect method. So I have a decrease in accounts payable. Are we going to add it or subtract it?
Subtract.
Subtract. Why? I know you can see in that chart, you know, where decrease or increase in current assets and current liabilities add or subtracted. I know you can see that in the chart, but I want you thinking about why. So why would a decrease in accounts payable, why would I subtract it? Well, what happens to cash when our liabilities go down? Do I have more cash or less cash?
Yeah, more.
So a decrease in accounts payable required the use of more cash, right? So that means that I have less cash on hand, right? So the lower my payables went, the more cash I used. If I used more cash, that means I have less cash on hand and I need to subtract it. Does that make sense? Just like on the receivables, if my receivables decreased, that means I got more cash, I would add it. If my payables decreased, that means I used more cash, meaning I have less cash on hand, so I'm going to subtract it. Payment of dividends.
Financing.
Financing, good. And outflow or inflow?
Outflow.
An outflow. Okay. So those are the activities that we see that affect the income, the statement of cash flows, and then what section are we going to put it in? What I'm going to do is look at exercise 1110. Look at exercise 1110 on page 580. And I'm going to bring up an Excel file. Can y'all see the Excel file?
Yes.
Okay, cool. Now, exercise 1110 has given us just a comparative balance sheet. It hasn't given us the comparative balance sheet and the income statement, which we're going to progress to. But it gave us information from the income statement that we need to use. One of the things, remember I told you that there was this thing called the Bostic method of doing statement of cash flows. And I have students that I taught 15 years ago that was still, every now and then I'll get an email from that says, thank you for teaching me the statement of cash flows, still jamming at them. I mean, I got one, actually it was on Facebook the other day because posted something on Facebook, and a student that I taught 15 years ago said, thank you, Dr. Bostic, still jamming at doing statement of cash flows in my job. They're a finance major, and we're having to use it. And if you account for the change in every single account on the balance sheet, then you end up with delta cash. If you account for the change in every single account on the balance sheet, then you end up with delta cash. This textbook teaches you to prepare the statement of cash flows by first preparing the operating section, then the investing section, then the financing section. What I'm going to do is I'm going to teach you to prepare the statement of cash flows by just systematically going down the balance sheet and accounting for the change in every single account. Okay. So the first thing I should have put, so the first thing that we're going to do is, I should have done a template on this, so I apologize for not doing a template on this, is go ahead and pull up Excel. I want you all to pull up Excel. And I want you to put in each of the account names, a cash, accounts receivable, inventory, prepaid rent, land. Y'all got it. I'm not going to call them out to you. So I'm listing every account on the balance sheet. And then we're going to list the balance for 2021 and 2020. And my 20. Sorry, I didn't have this. I could have had this done for y'all and had the template up, so I apologize. I have the one that I've already prepared, but I want to get this one done also before we do the one. Okay, and then I'm just going to make sure that I balance I don't want that. Make sure that I entered them in correctly. And I did, yay for me. All right, so I've got mine entered, and then I just made sure that I balanced, that my total assets equal total liabilities and stockholders' equity. And what I'm going to do is I'm going to just do a we'll put the name of the company, which is Plasma Screens Corporation, statement of cash flow. And then it'll be for the year ended 12/31/21. Okay, so we're going to do the statement of cash flows for December 31st, 21, indirect method. So I'm just going to go ahead and format it out in that I know that there are 3 sections. The operating section, and then I'll leave some room. And then I know I've got the investing section and the financing section. And then I'm going to have change in cash, beginning cash, and ending cash. So that's the basic format of my statement. And we're going to look at how the change in every single account, the change in every account that I can put somewhere on that statement of cash flows and get it to come out correctly. So what I want to do is figure out what is delta cash, delta accounts receivable, inventory, etc. So equals 21 minus 20, and I know that cash decreased $17,900. And I'm going to copy this down. And I have got the change in every single one of my accounts. So this is my change during 2021. So when you get your comparative balance sheet and income statement, this is the first thing that you're going to do is you're going to calculate what is the change in every single account. Now, the cool thing about, let me give y'all a few minutes to catch up. Liz, have you got it? You finished it?
Not yet.
Not yet. Okay. I just wanted to give y'all time. I didn't want to sit here if most of y'all have finished it. So I'm looking at what is the change during 2021. All right, so what I did was I just froze my panes so that we could, you could see the top part and then where I'm putting it. All right, so y'all ready?
Yep.
All right. So I've got the change in each one of my accounts, and I'm going to put the change in somewhere on that statement of cash flows. Now, the cool thing about this statement of cash flows is you know your answer. Delta cash is your answer. And looking at what the statement of cash flows looks like, we know that down at the bottom of the statement of cash flows is we need to come up with the change in cash. And I know the change in cash is a decrease of $17,900. And I know that beginning cash was 126,800. Was I know that beginning cash was 126,800. And I know that ending cash, when I take the 17,900, combine it with 126,800, ends up with 108,900, which in fact it does. So now I have accounted for the change in my cash account, and I have dealt with it on the income statement. Statement of cash flows. So let me go ahead and highlight that number. Now I'm going to go to accounts receivable. I stay consistent, just, systematically go down the balance sheet, and I find you stay out of trouble, just like on those income statement when I gave you the Bostic hints. So now the next thing that I have is I have the change in accounts receivable. And what did accounts receivable do? Did it go up or did it go down? Did accounts receivable increase or decrease?
Increase.
Come on, man.
Decrease.
Decreased, right? It's got a negative around it because it decreased. All right, so accounts receivable decreased by 15,000. Which section is it going into? Is it operating, financing, or investing?
It's going in operating.
Good, it's going to operating. So I'm going to leave some room because I know, so I'm going to put decrease in accounts receivable, and my decrease in accounts receivable was how much?
Negative 15,000.
Right, okay, so my decrease in accounts receivable was 15,000. Sorry, my decrease in accounts receivable was 15,000. Now, if accounts receivable decreased, that means that less people owe me money. So does that mean that my cash balance is higher or lower because of the change in accounts receivable?
Gonna have a higher cash inflow.
Good, I'm gonna have a higher cash balance, right? Or higher cash inflow because accounts receivable decreased. So if I had a higher cash inflow because more people owed me money, I'm going to add it. Okay. Now add it to what? We haven't gotten there yet. We just know that we're in the operating section and we've got a decrease in accounts receivable. And so now I've dealt with the decrease in my accounts receivable. Inventory. Inventory increased. What section is it going into? Come on, these ought to be quick. what section is it going into?
Operated.
Operating, because it is a current asset. And I've got an increase in inventory. Now, if I had an increase in inventory, do I have an outflow or an inflow of cash?
Outflow.
An outflow. Because if inventory went up, it used more cash. So I've got an outflow of $16,000. Now I've accounted for the change in inventory. Prepaid rent. What kind of an account is it? Is it an asset, liability, or equity?
Asset.
Asset. Is it a current asset or a long-term asset?
Current.
Current. If it's a current asset, what section of the statement of cash flows is it going into?
Operating activities.
Good, operating. So I'm going to have increase in prepaid rent. Now, if my asset prepaid rent increased, is that an outflow or an inflow? If an asset increased,
It's an outflow.
it's an outflow, good, because it used cash in order to make that asset go up. So I've got an outflow of $3,000. So now we've accounted for the change in prepaid rent. Land didn't change, 530 to 530. If it had, what section would it go in?
Investing.
Investing, good. Now equipment, what did equipment do?
Equipment
Increased.
It increased, right? Equipment increased. Now look at the additional information on page 580 in your textbook. Do you see the additional information that the company purchased 110 in equipment? Do you need that additional information?
Yes.
Why?
Because it's going to affect the balance of equipment.
It does, but do I know just from looking at my balance sheet that equipment went up 110,000?
Yeah.
Yeah. Did I need a sentence to tell me that?
No.
No, I can look at my balance sheet and see that. Okay. I didn't need number 2 to tell me that, so pretend it's not there. Now, what kind of an account is equipment?
That's it.
And current or long-term?
Long term.
Long-term. So what section is it going into?
Investing.
Good. So in investing activity, I'm going to have purchase of, was it equipment?
Yes.
Purchase of equipment. And that purchase of equipment was 110,000. It's going to be a negative because it's a cash outflow. It's a cash outflow in the investing section. So now I've accounted for the change in equipment. Accumulated depreciation, what did it do? Remember, it's a contra equity account, contra asset account. So what did it do?
It decreased.
Well, it increased. It's a contra asset. It increased by 150, went from 288 to 438, 150. All right, accountants, y'all started this class off being bookkeepers. All right, accountants. What makes accumulated depreciation change? When do you had to credit accumulated depreciation? When do you credit accumulated depreciation?
When something depreciates,
Good. When you debit depreciation expense, right? What did it tell you depreciation expense was? Look at number 3 in the additional information.
150,000.
Right, it says depreciation expense is 150,000. Did you need number 3? Did you need that information?
no.
No, because you know here that what makes accumulated depreciation change is that 150,000 of depreciation. Now, which section of the cash flow statement is that 150,000 going into?
Operating.
Operating. Okay, it's going to go into operating. It's one of the first adjustments that we have. And am I going to add it or subtract it? Am I going to add it or subtract it? Come on, Aiden, you've been telling me this one the whole time.
Gonna add it.
I'm going to add it because depreciation expense, and I misspelled this brutally. Why am I adding it? Why am I adding it in the operating section? We've already discussed this. What was the first type of adjustment that you had of the 3? What was the first type?
Remove non-cash items, which depreciation is considered a non-cash item.
Good, DJ, it's considered a non-cash item. Did depreciation expense use cash? Y'all have already answered this. Did depreciation use cash? We debit
No.
depreciate, no. So it did not use cash, but did it reduce net income? Because remember, net income is going to be my starting off number. So it didn't use cash, but did it have an effect on net income?
Yes.
Yes. What does an expense do to net income?
Decreases it.
It decreases it. So if I want to remove the effect of it, what do I need to do to it? To net income, do I need to add it back or subtract it?
Add it back.
Add it back. I need to add it back. So now I've dealt with my 150,000. Now I've got accounts payable. Accounts payable went up. What kind of an account is accounts payable?
Liability.
Current or long-term?
Current.
Current. So if it's a current liability, what section does it go in?
Operating.
Operating. So I've got an increase in accounts payable. Now, am I going to add it or subtract it?
It's an outflow, so you're going to subtract.
Well, if accounts payable went up, DJ, if accounts payable went up, that means I owe more people money, right?
Mm-hmm.
If I owe more people money,
Of inflows.
it's going to be an inflow, exactly. Because if I owe more people money, that means I didn't spend money. So it means that I have more cash still on hand. So if my accounts payable went up, increased, that means that I did not use money to pay my liabilities because my liabilities are higher. And so it's going to be that I'm going to add it because I have more cash on hand. You can think of it this way. it is less of an outflow. Now, some students that makes sense to, some it confused, but I can say it multiple ways. I used less money because accounts payable went up. I have more money, so I add it. Or it's less of an outflow, so I'd add it. Whichever way makes sense to you. And if neither one does, then you need to keep practicing. All right, interest payable. What kind of an account is interest payable?
It's a liability,
What kind of liability?
short term.
Okay, good. So is it operating? What section is it in?
It's operating.
Operating. So my interest payable decreased. So decrease in interest payable. Now, if interest payable decreased, am I going to add it or subtract it?
Subtract.
Subtract. Because if a payable decreased, that means my liability decreased. How do we make liabilities decrease?
Debit.
Right? Well, yeah, but we're not talking about debit credit here. We're talking about use of cash. So if my liability decreased, did I use cash to make that liability decrease?
Yes.
So if I used cash to make my liabilities lower, then I have less cash, so I'm going to subtract. Now the next account is income tax payable. What kind of an account is it? Come on.
Liability,
Liability, current or long-term?
current,
What section?
operating.
Very good. Yay, that's the way we're supposed to do it. What did it do? Did it go up or down? Do I have an increase or decrease?
Decrease.
I see an increase from 6 to 10.
Oh, oops. Yeah, I was looking at it the wrong way.
So it's an increase in income tax payable. And if I have an increase in income tax payable, am I going to add it or subtract it? Add. Because if my payables are higher, that means I did not use cash to pay them, which means I have more cash on hand. So I'm going to add it. Notes payable. What kind of an account?
Liability,
Long-term, short-term?
long-term liability. So
Long-term, good. So which section is it going into?
investing,
Financing,
financing.
right? Remember, any cash flow in cash inflows between creditors and the company and owners in the company. So this would be with the creditor, so it would be financing activity. Now, did my notes payable increase or decrease?
Decrease.
Decrease. Now, in the operating section, we use increase and decrease. In the investing and financing sections, we actually say what happened, like purchase of equipment. I don't say decrease in equipment. So in the financing section, if my notes payable decrease, then paid on notes payable. And if my notes payable decreased, am I going to add it or subtract it? Think about cash. If my liabilities went down, did I use more cash or did I use less cash?
Use less cash.
So liability, then how did I pay for my liabilities if I didn't use cash? So how did I make my liabilities go down? What did I pay with?
On account?
So I'm gonna go to the bank and I'm gonna say, bank, I'm gonna pay my note on account. If I go to the bank, how do I make the amount that I owe the bank go down?
Paying with cash?
Good, I gotta pay them with cash, right? So if my liabilities are lower at the end of this year than they were last year, how did I make them lower?
With cash?
With cash, exactly. So it's going to be an outflow because I used cash. Now, no change in common stock, so I didn't issue any common stock. Now let's look at retained earnings. This aggravates me. So now let's look at retained earnings. What causes retained earnings to change? Remember your statement of stockholders' equity. What causes retained earnings to change? You got beginning retained earnings plus what? I'm gonna make y'all do financial statements on this final exam like you did on the first one. Remember how I gave you that? Y'all forgot how to do financial statements already? What causes retained earnings to change? I fussed at y'all last week about this and y'all still forgetting? What makes retained earnings change? We got beginning retained earnings plus what?
Revenues.
Plus revenues minus expenses, which revenues minus expenses equals what?
Net income.
Net income. So beginning retained earnings plus net income minus what?
Dividends.
Dividends. Okay, gives me ending retained earnings. So what causes retained earnings to change?
Revenues, expenses, and dividends?
Which equals what? Net income makes it go up, right? Oh, I just want this to be I'll left justify it. So what makes retained earnings go up?
Revenues?
Net income? Well, I'm trying to get you to combine revenues and expenses. Remember, we had beginning retained earnings plus net income minus dividends, right? What was net income? What did it tell you net income was? I'm about 5 minutes away from shutting class down today and making y'all responsible for this. I told you on Thursday to practice doing these statements so that this didn't happen on Tuesday, that y'all were ready to go and understood it. So I'm about 5 minutes from shutting class down and y'all are going to be responsible for this material.
Net income is 79,000.
Net income is 79,000. So if my beginning retained earnings, remember you have beginning retained earnings. If my beginning retained earnings was 184,000, net income was 79,000, and ending retained earnings is equal to 233, then what did dividends have to be? It's just a math thing right now. So 184,000 plus 79,000 equals what?
263,000.
All right, and to get 263 to 233, what did dividends have to be?
30,000.
Good. So dividends had to be 30,000. I'm going to auto sum. And you see I get 233 equal 233. So do you see number 5 in the additional information where they gave you that dividends were 30,000? Do you need to be given that information?
No.
No, you can figure it out because you know this. You learned this the very first week of school, the very first week of the semester. So now let's apply what we learned. So now I know that the net change of retained earnings was 49,000, but I know that it was from an increase of net income of 79,000 and a decrease from dividends of 30,000. The net of these two is 49,000. So now let's put these two pieces of information into the statement of cash flows. Net income is your starting off number. And net income is 79,000. Goes in the operating section. Dividends. What section does dividends go into?
Financing.
Good, financing. And is it going to be an outflow or an inflow?
Outflow.
Outflow. Paid dividends of 30,000. Paid dividends of 30,000. Now I've accounted for the change because the net of these two is 49,000. So now I've accounted for the change in every single balance sheet account and put it in the proper spot on my statement of cash flows. Okay. So now let's see if my statement of cash flows balances. My operating section, cash from operations and my cash from operations is 237,100. I just summed these up. So my cash from operations is 237,100. What is my cash from investing?
It's going to be negative 110.
Exactly, negative 110. And what is my cash from financing?
Negative 145.
And it is negative 145. Now I need for these three to equal delta cash. And let's see if they do. Negative 17,9, negative 17,9. Now's the time to party. Woohoo! It balanced. Raise the roof. So we can take a comparative balance sheet and an income statement, and we can prepare the statement of cash flows. And I do that by accounting for the change in every single balance sheet item. The reason that I need the income statement was because for the change in retained earnings, I need to know what net income is so that I can then figure out what dividends are. I also need to make sure that the change in my accumulated depreciation equals depreciation expense. And then if I had sold any land, we didn't in this one, I need to know whether I had a gain or a loss from the sale of land. That would be another adjustment that we would need to do. Okay. If you systematically go through accounting for the change in every single balance sheet account and putting the change somewhere on this statement of cash flows, your statement of cash flows will balance. Just like your financial statements when you followed the Bostic rules. Okay? You're going to be doing this next week or the week after. So y'all need to do some practice on this. In-course content information. I'm going to this was exercise 11:10. In-course content information, I have uploaded an old exam question where I gave the students a comparative balance sheet and an income statement. And a comparative balance sheet statement. Sophie, no problem. A comparative balance sheet statement and an income statement. I think it's Serenity, and had to prepare a statement of cash flows and had to prepare a statement of cash flows. So I want you practicing it. I'm going to upload the solution to it. And then in class on Thursday, I'm going to give you another one that doesn't have the solution to it so that in class on Thursday, you can practice. You can do one that where you don't have the solution because you've been practicing the one that I did upload. Is anybody going into course content information?
Yes.
And do you see where I say, or maybe I didn't, is there a cash flow statement uploaded?
Yep.
Oh, good. Is the solution to it uploaded? It would be right underneath it.
No, I don't see it.
Okay. What is the name of that?
Hold on. Serenity.
Okay, yes, Serenity. Y'all know what Serenity is? Serenity is the name of one of our boats, the bigger boat. Serenity. Y'all know we have two sailboats, huh? Y'all know I'm a sailor. Did y'all know that? Are y'all
Yep.
just learning something about me? Thought y'all knew I was a sailor. Anyway, Serenity is the name of the cruiser boat, not the racer. Y'all know what's the name of the racer? I've never told y'all what the name of our racer is. Oh, I probably shouldn't. She's the WTF. But she's a Pearson Flyer, is her brand, her make and model. And most flyers have Flyer in their name. And so we decided to name ours the WT and it has a big W, a big T, and then a big F, and then a little LYER. So it's the WT flyer, but everybody at the yacht club and on the race course knows it's the WTF. Where's the flyer? So anyway, yeah, flyer, the WTF and the Serenity are the two boats. So Serenity, work on Serenity and do what I just did so that in class on Thursday, y'all don't upset me like you did today, and we can work another problem efficiently, and you better understand this cash flow. Read the chapter. Understand why in the direct method all the delta current assets and current liabilities are in the operating section. Understand why I'm removing the effect of those non-cash activities. Understand that when accounts receivable increases, why I subtract. Think about your balance of cash. Do I have more cash or do I have less cash? Okay? Will y'all do that? Y'all don't
Yep.
like seeing me upset. I know right before finals, come on, y'all been doing so good all semester long. Has this quarantine gotten to us yet? Mentally done? Ellie, you look like you're just like, had enough, right? So work on that statement of cash flows. I will upload the solution for you to check your answer to see if you understand it. Then we're going to work one real quickly in class on Thursday, and then we'll get ready for the exam. Okay. Notice that, did y'all see that I uploaded the topical information? Okay. So go through it so that any questions that you have, you can ask questions. Now, again, I will have office hours. I'll have open office hours on the day before y'all's exam. Y'all's exam is on Thursday. So on that Wednesday, I will have open office hours for y'all to come and ask questions. Okay, so go through that topical index. Guaranteed you're going to be doing a statement of cash flows on this exam. Guaranteed 100%. It's a very important statement to understand the effects that your changes in your accruals and deferrals, current assets and current liabilities have on net income and cash flows. Okay? All righty, I'm gonna let y'all go do whatever y'all would prefer to be doing besides sitting and listening to me about cash flows, but y'all gonna practice them for me. So Thursday, we're all energetic. Okay? All right, promise me that. I miss y'all. Please get this cash flow shit together. All right, see y'all Thursday.
Thank you.
You're welcome.
Thank you.
You're welcome. And I'll get the solution to Serenity uploaded.
All right.